In this video, I'm going over my top 3 stocks from the month of September 2022. So, over the last month, I have researched hundreds of different companies, and this is my stocks I think should be on your watch list. I encourage you to watch until the end to get my full analysis on each of these companies. I'll go over the key numbers, recent news, and why I expect them to grow in the long term. Nowadays, inflation rates have reached historical high, and this prices increase have completed Federal Reserve to raise interest rates. Of course, nobody fully knows what's going to happen next, but the best thing that you can do is to just stay updated on the news and just dollar cost average into the market anyways. And also, don't forget to subscribe on my channel in order to get notification about new videos. Okay, let's get started. So the first document we are talking about today is Global Payment Stock, ticker GPN. It's a multinational corporation known for its payment services for businesses. So right now, one share of GPN is trading at $125, 124.18 cents to be precise, and we've seen some ups and some downs, as well as hitting 3-year low of about $1,000 per share. Sorry, $100 per share. But since then, it has risen a little bit. With a small recovery recently, we have market cap of $35 billion, forward P/E ratio about 13. Current P/E ratio seems very extremely high, 6,095, because Global Payments have bought its competitor EVA Payment for $4 billion, and so this generate loss in last quarter, but it's not a permanent situation. Global Payments also pays dividends, very small dividends, of course, $0.5 per share. However, there will be more next year because their earnings per share and revenue per share grow. Cash flow and net income long-term trend is especially appreciated me because we can clearly see a strong growth trend. Last 10 years, every year Global Payment generates more revenue and the measure of it about 20% per year. This is an average number, of course, but it is so interesting for investing in this stock. Well, look at the balance sheet. Global Payments has a huge debt, about $12 billion. However, the interest coverage is normal. It's about 4.28. It's not a very good, but it's acceptable for this company. Guru Focus has it listed as significantly undervalued. Moreover, it warned us that it can be possible value tracking twice, but there is no reasons to think so. It's a bit false. And the Guru Focus evaluates the fair price for GPN, $20,015.73. I agree with Guru Focus that GPN is undervalued, but I think the fair price is about $180, no more. What about profitability? GPN gross margin is about 56%. It's a really high number because for PayPal it's about 20%, for Visa about 40%, so this is a really high number. Return on equity is about 0.3, normal value. Return on assets 0.17, normal. Okay, notice that all 10 years, or all over past 10 years, the Global Payments was profitable. It's very important when choosing company for investing that it will be stable, and the Global Payments financials let us that it's really strong company with stable growing revenue and net income. So right now it will be more than reasonable to turn to a financial services company that is highly faithful in its own business and state of the market as a whole. Overall, I think that global payments is definitely worth checking. The second stock on the list is a Meta stock ticker FB. Meta is an American tech company based in Menlo Park that is largely known for its development of the social media platform Facebook. So right now, one share of the Meta is trading about $1,060, close to 52 weeks low. It's about $155. And looking at the 1 year price chart, you can see that 1 year ago the price was gradually increasing from about $20,080 to over $30,080. And the $30,080 was the highest price per share for this stock. So after that, we saw a small decline in price starting in September of 2021, followed by a huge correction at the start of February in 2022. And the current market cap is $40,030 billion. We have a ratio of P/E ratio of $13, which is absolutely very low for a company like Meta, and earnings per share about $10.19. So reasonably, Guru Focus is marking it as a significantly undervalued. And the fair price for Meta stocks is $3,085.38. The PEG ratio is 0.5. It's very low value. And the price to book is about 3.44. Also, they have really great profitability with a profit margin 33.41%, and very strong return on equity. This value is about 26%. And the cash flow chart for Meta is fantastic. Double-digit growth of revenue, double-digit growth of net income, and this is last 10 years. And right now, the management evaluates the potential of the growth next 5 years as about double-digit numbers, an average 10% per year. It's very good digit because the Meta is a 2 trillion capitalization company. And from the balance sheet of Meta, we can conclude that a company has a strong cash position with about $50 billion, and this empower the financial strength and sustainability of Meta. Okay, why the Meta stock is so cheap? I really do think that Meta is selling at big discount, as you guys might have this so mega experience and massive price drop at the end of the year in January after report its first sequential decline in active users around 2 months ago, and now Meta sells for less than 13 times of its estimated earnings. This is outrageous considering the durability of company, the assets that is owned. For example, Instagram is still doing phenomenally, and the value that it can bring to the kid to the table, especially in regards to the development of the metaverse. In spite of declining active users of Facebook, business is still clearly growing. It was Meta invested $8,000 million into the opening of data center in Kansas City. The data center is going to be huge. It will be located in the city 5.5 million square foot data center campus called Golden Plains Technology Park. Hopefully, this is going to be a chance for Meta to redeem itself, but here we do have underperformance again. We will see the price of Meta probably go down more overall. However, I think there was a pretty big overreaction to the decline in user, and personally, I feel that it's really hard to go wrong with investing in companies like Meta because it's so durable, it's leader in the space, and in the long term, Meta should do exceptionally well. So the last stock we were talking about today is Microsoft stock ticker MSFT. Microsoft is an American tech company known for its production of computers and software. So one share of company is currently trading at $20.65, and this price is close to average middle price last year. Okay, looking at the 1 year price, that we can saw some really big gains for the last year and all the ups until November, December, which is normal because as right now tech is definitely hurting. They have a market cap of $2 trillion and PE ratio of 27 earning per share. And they pay a small dividend of 0.93%. At their current valuation, they have a 5-year expected PEG ratio of 1.85. 1.34, sorry. And price to book ratio about 12. And from this chart, we can clearly see the double-digit growth of net income and the revenue last 10 years. It's a really fantastic result. So I think that Microsoft is the best company in the US stock market. Guru Focus analysts estimate the fair value of Microsoft at about $3,000, and it's modestly undervalued. In my opinion, the fair prices for Microsoft is a bit higher. It's close to $3,030 per share, and the T-Ranks analysts agree with me. Their consensus forecast is $3,025 per share, and they make a strong buy recommendation for Microsoft. Overall, I'm always dollar cost averaging Microsoft stock, and it's definitely one that I think you guys should keep on your watch list. Those are my top stocks for the month of September 2022, and if you guys enjoyed the video, make sure to share with a friend and also like and subscribe if you want to see more videos like just this. That's it for this video, thank you so much, and I'll see you in the next video. See you!